Hello, everyone. Thank you for tuning into this Your Overseas Home webinar, in which we're focusing on financial planning and understanding tax in Italy. Whether you're moving there to live or maybe you're investing there and you won't have tax residency. I'm Richard Way, a member of the Your Overseas Home content team, and I'll be hosting this session. It's great to have you all with us, whether you're watching live or you might be watching our recorded version, which is available through our on-demand webpage on the Your Overseas Home website. The idea of this session is to ensure that wherever in Italy you decide to settle or buy property, all aspects of your financial profile have been considered and structured in the best and most tax-efficient way in accordance with cross-border regulation. So we'll be looking at what to do with overseas pensions, investments, tax-free wrappers and any other assets you have, as well as addressing key considerations regarding your tax position and reporting obligations. We'll also look at how these things can affect the cost of living in Italy and what you can expect to pay for your day-to-day life there. Getting these things right should help make La Dolce Vita, the sweet Italian lifestyle, as affordable and enjoyable as possible for you. Cross-border financial planning tends to be a complex subject, and getting specialist advice is a no-brainer, which means I'm ready to hand over to someone who knows about that and not me. And that's our speaker today, the person who'll be providing us with all the valuable information. And that is Jacob Shelton, who is a senior wealth manager at international financial services provider Holborn Assets. Himself an American living in Europe, Jacob's got first-hand experience of cross-border financial planning himself. He's got more than 10 years in the financial services industry, including private banking, so he's ideally positioned to help you and if you're a foreign citizen moving to Italy. Welcome, Jacob. You can hear us all right.
Great. Well, thank you for that introduction, Richard, and good afternoon, everyone. Welcome to today's webinar on an introduction to financial planning in Italy. As
One
Richard
second.
mentioned,
just to say very quickly, yeah, no problem. We've got about 30 minutes, so Jacob's going to do a presentation, but we want to hear from you, our audience, as well. There's a questions tool on your dashboard, so if you do have a question at any point, type it in there, and then I'll field it to Jacob at a convenient time. We'll probably wait to the end of the presentation to address the questions, but we will get to them. Sorry, that's it from me now. I'll shut up now. Over to you, Jacob. The floor is yours. Thank you.
Yeah, no problem, Richard. But yeah, as he mentioned, I am Jacob Shelton, Senior Wealth Advisor with Holborn Assets, which we are an international wealth advisor.
I don't think. Are you there, Jacob? I think he's.
You're
back with us.
Our tax system. Oh, my apologies, Richard. Can you hear me?
I can. I think. Could you start from scratch there, Jacob? Sorry, we lost you just as you started introducing yourself.
Oh no. Okay. Well, I'll. No, not a problem. Well, today we'll cover crucial aspects that every expat should know before taking the plunge into the Italian real estate market and making a move. Our journey will take us budgeting.
Is he there? Are you there, Jacob? Sorry about these technical issues. I'm not sure if you can hear us.
Yes, I.
You're back. Right. You're back.
Okay. And please, Richard, let me know if it cuts out at any other time. Want to make sure that everyone gets a full presentation out of me. So yeah.
If you see my hand go up, then you've gone down. Okay, how's that?
Okay, that sounds great. Well, not great. Hopefully it just stays put.
Stays down.
Yep. And as Richard mentioned, right, about a decade in financial services, mostly back in the States, working at companies such as JP Morgan and Morgan Stanley. I currently live not necessarily in Italy, but on the southern coast of Spain and the Costa del Sol, but work with clients in the EU and really all over the world. But first we'll dive into some income tax, the fun stuff, right? Italy operates on a progressive tax system, which means the more you earn, the higher percentage you pay on the amount in that bracket. The tax rates have been updated in 2025, so here's what you need to know. For income up to 28,000, you'll pay 23%. From 28,000 to 50,000, the rate jumps to 35%. Anything over 50,000 is taxed at 43%. But that's not all. You also need to factor in some regional taxes, which can range from 0.123% to 3.33%, and up to an additional 0.9% for the municipal taxes. These rates are just on earned employment and pension income, so it's crucial to consider these rates when budgeting for your Italian lifestyle if you're still working or taking funds from a pension system, which also includes American 401ks and IRAs. There are some exceptions to this. If you live in a designated 7% retirement tax region in a qualifying city. These cities are typically in the southern region and in towns with populations of less than 20,000, but it can be an excellent option for many retirees who might prefer a slower pace of life in a sunny region. There are also some additional special flat tax regimes to apply for if you're an extremely high earner, which can drastically reduce your tax bill. Now let's focus on some property-related taxes, which are especially relevant for home buyers. There's a registration tax, which is a one-time tax paid when purchasing property. For your primary residence, it's 2% if buying from an individual or 4% from a developer. For second homes, it increases to 9% from individuals or 10% from developers. And then there's the IMU, or Imposta Municipale Unica. This is an annual property tax, which ranges from 0.4% to 0.76% of the property's cadastral value. Now, these values, right, can range in what type of area your house is in, whether it's in a city or rural, how large it is, the amount of occupants in there. It's typically less than the purchase price, and that's what a lot of these different ongoing taxes are based off of. Now, the good news is your primary residence is often exempt unless it's classified as a luxury property from this ongoing property tax. There's also the TARI, or Tassa Rifiuti, which is a waste collection tax. The amount varies by municipality and is based on property size and occupants. There's also some special tax regimes that Italy has for property purchasers under the age of 36. So if you are under the age of 36, make sure to inquire about those, as it can change the budget of the property that you're actually looking at and some of that final cost to actually close there. For those thinking long-term, it's important to understand the inheritance and wealth taxes. Inheritance tax for spouses and direct descendants is 4% on amounts exceeding $1 million per heir. For siblings, it's 6% on amounts over $100,000 per recipient. For other relatives, it's 6% on the entire amount. And for unrelated beneficiaries, it's 8% on that entire amount. Italy also has a wealth tax on foreign assets for its tax residents, which is 1.06% on foreign real estate and 0.2% on foreign financial investments. It can go up to 0.4% for assets in tax havens, which, for example, Jersey is a great example for that for UK residents. We often see UK expats that might have some assets in Jersey, and there's going to be an additional tax for really having your assets there. But remember, those taxes only apply to tax residents. So if your tax residency status is going to be crucial in determining those foreign wealth taxes there. So the shown figures here are actually for a family of 4, but it can vary greatly depending on your own lifestyle and where you live in Italy. Understanding the cost of living is crucial for effective budgeting, but as you can see, there's a significant difference between the north and the center and the south. Housing costs can vary greatly by city. Rent is typically, it can be more expensive than buying in some areas of Italy, not so much in the other. So it can be a good metric just for use of budgeting before you actually purchase your property. But for example, Bologna, right, is the average rent there is about 1,500 euros a month. But there's other cities in Italy, particularly in the south, which can be much cheaper. Some cities in Italy, is near Sicily, can be as low as 365 euros a month. So you can really tell it varies greatly depending on where you're going to be. But the biggest thing in Italy when it comes to monthly expenses is similar to real estate. Location matters. So for the UK listeners out there, transferring your pension when you move to Italy can require some careful planning. There's a legal requirement if you're transferring more than £30,000, you must seek professional advice. You want to ensure compliance with both UK and Italian regulations, and beware of the overseas transfer charge, which may apply in certain circumstances. There's a couple different options for those UK citizens moving overseas that do have these pension plans. QRUPs were traditionally the most common, and there was some inheritance planning that really was beneficial with QRUPs that is really no longer applicable since the change is September. And so much of the focus have changed into SIPs, or self-invested personal pensions. QRUPs are still out there, but each option has pros and cons. So you really want to take a close look into your personal situation, and professional advice is crucial. But beware of the tax treatment of your pension income in Italy. As I mentioned before, some of those regions offer that 7% attractive flat tax rate. But if you're going to be moving to maybe the middle or north of Italy, then it will be taxed along the lines of those. I'm sorry, Richard, did I see your hand go up there?
No, sorry, I was scratching my ear. Sorry.
Oh, no problem. Wanted to make sure you guys can still hear me. But it's really, if you're not living in one of those special tax regions, then you're going to be taxed along the lines of those that earned income tax brackets that we were looking at earlier. So it might not make sense to necessarily take huge lump sums of that pension over 1 year, specifically after you've already taken that 25% of that tax-free income. Probably want to do that before you become an Italian tax citizen, if you're essentially old enough to be able to do so at that 25% tax-free withdrawal rate. Americans living abroad can face a whole other set of issues with their own investments and financial planning. Your current financial advisor most likely is unable to keep you as a client once you move abroad. And if the institution they use to hold your funds finds out that you have moved abroad and are now have a foreign residency, they could potentially freeze your account. And if you don't move it at that point, they can liquidate your account, including retirement plans and brokerage accounts, which obviously can have some detrimental tax consequences of taking all of that as income. And in 1 year, we saw that top tax rate in Italy, and you don't necessarily want that to happen to you. Capital gains in Italy are taxed at 26%, as are dividends and interest. And so we really want to make sure that you're in a cross-border compliant institution. Certainly something that I'm able to help out with. But it's just important to make sure that you're working with someone who is licensed with the multiple regulators required to stay in compliance and still keep your assets back in the States. We want to make sure that your IRAs stay under that tax structure and get you the full amount of deferred capital gains as possible. Otherwise, Italy is going to have a different view of that. And so we also want to make sure that we keep our assets in the States to avoid any type of PFIC tax reporting requirements that can be detrimental for your tax reporting costs. PFIC is simply passive foreign investment company, but easier way to remember that is foreign mutual funds and ETFs. Retirement accounts can be a whole other issue, but we don't necessarily have time to get into some of those specifics today. I do conduct a monthly webinar specifically for American expats that you're free to tune into, and feel free to reach out for that information, or there's some recordings on YouTube for that as well. Although none for 2025 with updated the updated contribution limits. So I realize that we covered a lot of ground today very quickly, but I want to make sure that we save some time for the Q&A. We started with some of the details of Italian tax system to geographical budgeting tips for your new life in Italy, investments for expats that can be much more complex when it comes to moving abroad as opposed to in your home country. And beyond what we even spoke about, there are also Italian-specific investments that might make sense for high net worth individuals, but most likely aren't going to be right for everyone out there. One actual point that I want to circle back around to for UK people, as many have ISAs. Those are something that are going to be extremely beneficial for when you move, when you're in the UK. If you decide to move abroad and switch your tax residency to Italy and do not have any plans to stay in the UK or return back to the UK, you might want to actually liquidate those prior. And so just the dual taxation agreement doesn't work well with ISAs. And so my apologies for jumping back and forth there, but I wanted to make sure that we hit that point. Similar along those lines, for those high net worth individuals, those Italian specific investments that I was just getting into, some of the portfolio bonds that can be typical for other countries. There's just a little bit higher of a limit for Italians or for Italian tax residents, and so certainly something to explore. If you are a high net worth individual, please reach out. We can help those get those set up. Remember, while owning a home in Italy is a dream for many, it does come with its own set of financial responsibilities and considerations. Understanding your tax obligations, both for income and property, can be extremely important. Plan your pension transfers carefully and seek professional advice. We want to make sure to budget realistically, considering regional cost differences. Stay informed about wealth and inheritance taxes. Invest in professional, financial, and legal advice to navigate the Italian tax system. That's something that I cannot preach enough, is especially when you first move there, there's going to be intricacies that you're just not used to, the actual filing of the taxes, everything else. It's worth it to invest in quality legal, tax, and financial advice. I cannot stress enough how many times I've seen errors that people are 3 years down the road. It often makes sense to interact with some of these professionals a year to 18 months before you actually make that move, to start some of these planning, spread different aspects over tax years before you move. It can save you a lot of money at the end of the day. Now let's move on to the Q&A session. I'm excited to address your specific questions and concerns. Remember, while I can provide general guidance, for personalized advice, either schedule a time to speak with me directly or consult a tax advisor or attorney who specializes in expat matters in Italy. Thank you for your attention. Let's begin Q&A.
Thank you very much, Jacob. We have got some questions coming, which is great. I was going to ask you first, though, there are a lot of people who are thinking of splitting if they're retired, for example, or semi-retired, and they're going to split their year between Italy and the US, or Italy and the UK. Generally speaking, would you advise them to keep their tax residency in the UK or where their currently is, or could there be an advantage to move to becoming a tax resident in Italy? Do people generally save their tax on their tax bill if they move to Italy, if they can spend 5.5 months in one country and 6.5 in the other? Is there one that would be more favorable?
So it really depends, Richard. And one thing it's going to depend on is your income level and where you move to Italy. If you are an extremely high earner, let's call it 400,000, pounds or dollars, right, it might make sense to actually make the move to Italy, at least for British citizens, right? U.S., we're still taxed wherever we decide to move. Lucky us, Uncle Sam follows us around. But for British expats, it can make sense to actually move and get. Italy has a 100,000 flat tax as an option for expats, and so that might make sense for people who would in the UK have to pay more than that. But in Italy, they have that cap on taxes, and so that might make sense for some. For pensioners, moving to the south of Italy and enjoying that 7% tax rate would certainly make sense for many, but it's going to be very specific on levels of income, assets, and where in Italy you're moving.
Okay, now that makes sense. In fact, as you were answering that, a question came in from Michelle, and she said if she wanted to purchase a home and have a part-time residence in Italy, but retain our US home and taxation. So first of all, what does part-time residence mean? It means having, well, you're either resident, you can have residency in Italy and in legal residency in Italy and the US. Is that right? You need a visa for that. Otherwise, it's the 180-day rule. Is that right?
Right, and so that's really it. And unless you're a dual citizen of an EU country, right, to be able to move back and forth, as well as a US citizen, but that's certainly possible to exceed those. One big test of where you're actually going to be the tax resident of primarily is that 183-day test. So are you spending 183 days in Italy or less than that? If it's more, then you're going to be an Italian tax resident. If it's less, then just filing your US taxes. I will warn you though, Michelle, either way, you're filing US taxes. It just depends on the order of operations there.
Okay, so that's quite a key point as well. You made the 183-day rule. That's 183 days in a calendar year, isn't it? If you spend more than 183 days or more, then you become a tax resident in that jurisdiction.
Yeah, that's correct. And so over 183 days in Italy, you're going to be an Italian tax resident. So if you want to avoid that for any reason, for a good example, right, is selling your primary residence either in the UK or US. You have some of those capital gains exemptions for your primary residence, and so you might want to move in July and just avoid that 183 days and defer that tax year in Italy for the next one.
That's a good point. Yeah. So timing can be very important as well, can't it? Because of the way the tax year could fall. Yeah.
Timing and especially on years that you're planning on selling some large assets, whether that be a business, investment properties, primary residence, they can all be extremely consequential of your tax net gain.
Great point. Thank you. Question from Kate. She wants to know more about. I was going to ask this actually because I want to know more about this. The flat tax regime you mentioned, the 7% on pensioners in southern regions, and then the other one for the high net worth earners. I think you mentioned about the flat tax rate, 100,000 you just mentioned. But just tell us a bit more about the 7% and how that works and how you can be eligible.
Yeah, so it's fairly simple eligibility. I don't have all of the towns off the top of my head, but they are all in the south of Italy. Sardinia, I actually that's not necessarily true. Sardinia has a couple of those towns as well. It's essentially that they're trying to there's been a decrease in the population of those towns, right? We've all seen the houses in Italy for €1. It's one of these same types of programs. And so it's really trying to attract people. If you do move to one of these towns and are an Italian tax resident and you haven't been an Italian tax resident in the previous 5 years, you qualify. And so the list of towns is available online, or feel free to email me after. I can make sure to get you that. But it can be incredibly important for the flat tax rate of 100,000 for high earners. That's going to be Italy wide. And so, but again, you want to consider if your typical tax bill is 500,000, a million, then that 100,000 might seem very nice. And there's certainly situations that I've had clients who typically pay a couple million in the United States move over and really expect that. But if you're not getting those tax credits that really offset your US taxes, it's not going to actually make sense to really do that, because you're still going to have to end up paying those taxes. So it's still very dependent for US. For UK though, if you are a high tax individual, then it would certainly make sense to me.
Yeah, great. Okay, and still on tax and pensions, Peter, a listener, he says he's buying a house in Italy and he wants to apply for residency, but he's in receipt of a pension that's paid into private pensions that is paid into his UK account at the moment and taxed in the UK. So he's asking, should he have them paid into his Italian account once he's moved over there and pay them to the Italian tax office at the Italian rate, or should he keep them in the UK bank and tax at UK rates? Well, I don't think he has a choice, does he? He have to be taxed at the Italian rate if that's where he's tax resident. What's the...
So when you move to Italy, right, you have that Italian tax residency. Whatever year you actually do that, you separate with the HMRC, and you just want to make sure that any withholding on that pension, any potential withholding at source, right, that you elect to not have that being withheld. And at that point, whether it's going into your UK bank account or your Italian bank account, you're still paying that lower tax rate.
Okay. Thank you. A question here from Victoria. How does the first home tax rule work? So they're based in the UK, they're looking to buy in Lazio, but we're still own in the UK when they buy in Lazio. We're a married couple, one with an Irish passport, one with a UK passport. So I guess he's asking about the rates on the transfer tax, the stamp duty tax. It's less if you're buying a primary residence, you said. But if they're based in the UK and still living in the UK, how will they qualify for that? Or I guess the question is, when do the Italian tax office accept that you're buying a first home? Is it, do you have to have sold your other primary residence? How do they know you've done that? Or do you tell them and then they check in 6 months? Or how does it work?
I would defer to an Italian tax advisor on that one, because I don't necessarily want to step on my own toes there and give poor advice. It sounds like, though, and from my understanding, that being said, is that if you currently own your property in the UK, it would most likely be taxed at that second home rate for that stamp duty. So that's, again, check with an Italian tax advisor to verify, but that's my understanding.
Mm-hmm. Okay. Yeah. No, thank you. Good question. Relatively obvious, really, but something we might not all know. What's the difference between residency status, or what we call legal residency, which gives you the right to be in a country and enjoy certain benefits, and tax residency, because they're not the same thing, are they? You want to just explain that?
Yeah, it's an important distinction, right? Because in the example I gave earlier, right, if you're moving in July, and you have your visa to be in Italy, but you're a resident of Italy, but you're not a tax resident quite yet, and so the person who asked the question earlier, who had an EU passport and was married, right? They have the ability to move to Italy and become a resident, but they don't actually become a tax resident until they spend over 183 days in the country. And so residency is really the ability to be there and be there legally, while tax residency is you are there over 183 days.
And in fact, it's what a lot of the golden visa applicants do if they want the flexibility and the ability to travel in Europe and be in Europe unhindered. They can get a visa that gives them residency, but they can retain tax residency somewhere else. But it just means they can come and go and live in the country, doesn't it? But as long as they don't go over 183 days in the year.
Yeah, and we're seeing a lot of those golden visa applicants, both for Italy and Portugal. Spain, unfortunately, has shut down their golden visa program here in just a few weeks. But if there's anyone considering applying for a golden visa, please let us know. We're happy to help.
Great. 183 days. This is a quick question from Jennifer. 183 days. It's within the Italian tax year, isn't it? It's the calendar year. The Italian tax year is the calendar year. Is that right? Yeah. And it's not like the UK where we have to be different and have April till April, but yeah, most of Europe's a calendar year. So 183 days between January and December. Yeah.
Yep. That's exactly right. It's January 1st, December 31st. And so, yeah, you can certainly time it. That's why I was kind of making fun of July being a good time to move, because that ensures that you're going to be there under 183 days of that calendar tax year.
Perfect. Another question from Jennifer. The 100,000 flat tax rate, is that just applicable to income, your income, tax on your income, or any tax? I'm guessing passive income, salaried income, pension income. Is that's all income?
Yeah, that's going to be the whole boat there. And so, yeah, from any type of taxable income or capital gains that you may have, that would really be flat tax.
Okay.
But there are some stipulations with that, right? So you always want to make sure before depending on that to check with an Italian tax advisor.
Perfect. We've opened I was going to say can of worms, not can of worms because it's a good thing, but we've opened the floodgates on golden visa. We've got questions coming in about that now, but before I think what we'll do is we'll briefly go over what golden visa, the headline points about them, just conscious of the time. But there is another quick question here from Lynn. Is there any tax advantage to buying with a US LLC or a trust?
Yeah, no, and I'm sorry, was that in relation to a golden visa or in
just generally?
General
yeah.
Okay.
Or when might you do that? When might you do that? I suppose. Yeah.
There's not going to be a lot of protections that you're going to be afforded as a typical LLC. If you are an Italian tax resident, if you're going to be a foreign buyer either way and protecting your ownership in the United States, it can be helpful to put it in an LLC or a trust for estate planning. That's really going to be as far as the transfer of ownership within the states, that can be helpful. But Italian authorities it's a little bit of gray area for Italy, right? So Italian authorities potentially might not recognize the fact that the foreign ownership is within an LLC or a trust, while the American authorities, certainly would for a domestic property. So not something I would necessarily bank on by any means, but it can certainly make it easier. Other than your tax reporting requirements are going to be much higher, more expensive. You're going to want to make sure that you have a good US-based tax advisor in order to file those.
Okay, so yeah, that's another conversation with a specialist. Okay, we're at overtime, but because we've got questions on golden visa, and I will say we have done other webinars on what we call investment visas, which you can find on the Overseas Home website, and I'm sure Holborn Assets have got other marketing information about that. Just give us the headlines, headline takeaways about what a golden visa is, and it can be generally because it's not just Italy, but and what the benefits are.
Yeah, so a golden visa is the ability to be a resident, not necessarily a tax resident, right? The ability to be in the country or within the EU based off of an investment. And so that's why you hear those as investors' visas as well. In Italy, it requires investments into Italian companies. It's typically the easiest route. And so there's many different types of structures of those. And so I don't necessarily want to get into the specifics. But there's venture funds out there, individual companies, developments and projects. There can be an aspect of return on this golden visa, or without guarantees, similar to an investment in the stock market. And so there's all different types of structures of these golden visas. And that's very similar to a Portuguese golden visa, right? Which again, we help with as well. And so golden visas, right, is if you want residency by investment. That's really the easiest way to kind of flatly explain them. One huge thing for U.S. citizens is we are able to have this investment within your retirement account. And so we can set up a self-directed IRA to really structure and facilitate these particular investments, which can be extremely helpful.
And is it? Am I right in saying another great benefit is I think you call it the in-country requirements. So to maintain your residency status, you don't have to spend much time in the country actually at all with a lot of these visas, depending on the country. It might be as little as a week or two a year, and you still keep the status of residency through the visa.
Yeah, that's exactly right. That's why Portugal is really one of the more attractive ones for a lot of people. One, because of the lower starting amounts, for as little as 350,000 euros, but also it's because you only have to be there. It's a week a year, non-consecutively. It can even be 2 weeks every 2 years if you want to plan one big trip every other year. So, and you still get that time, at least in Portugal, to towards a citizen clock to be able to get your passport within 5 years. So that's certainly a huge advantage of golden visas that other visas really don't facilitate.
Question here about that from Rosemary. She said she understands you have to spend 500,000 minimum on a property. Well, that depends on the country now, because I know some countries have restricted the type of investment to more financial corporate-based investments rather than property. What's the situation in Italy for a golden visa? Can you spend it on property, or is it only financial?
I believe they still have the property option. I think, I am not the citizenship by investment expert. We do have a few on our team. Richard knows Jason Swan very well, in fact. And so, they might be a better person to really dial in these answers. But I believe that Italy still does have a property investment component of their investors visa, but that it is region specific. So that's really, it's not going to be for the whole of Italy that property component would be available.
Okay, yeah. So I put you on the spot there. It's not your specialist area, and like I said, we've done webinars with your colleagues at Holborn who are specialists in this, so I would refer people to those. But we've touched on it. Maybe we've put a few questions and a few more options in people's heads that they might not have had before. So we're over the time and we've run out of questions. So it's probably a good point to wrap up. Thank you very much, everyone who's tuned in and watched today, whether you're watching live or you're watching the recorded version. If you are watching live, you can go back and revisit anything on the recorded version. Of course, thank you as well, Jacob at Holborn Assets. We appreciate you giving up your time. Small request from us at Your Overseas Home. If you found this webinar useful, we'd really appreciate it if you left us a review on the review website Trustpilot, and there's a link that's popped up on the screen for you to do that. And a final save the date for you, which is the Your Overseas Homes comprehensive virtual event on the 22nd of March. So it's a remote event, a virtual event where you can talk and get introduced to all types of property specialists in real time, but you can do it from the comfort of your sofa, because you can tune in and visit the virtual show on your computer. And that's on the 22nd of March. And there'll be people much like Jacob today who are advising on property, financial matters, legal matters, mortgages, the whole one-stop shop. And to do that, there's a link on the screen. It's free, so make use of that. Otherwise, that's it from me. Thanks again, Jacob, and thank you everyone for listening. Bye-bye.
Thanks for having me.